Yo, crypto pirate, getting ready to profit from the bear market of 2021. Ooh, it's a sunny day. Can't see anything. Oh. You're gonna... No, you're not gonna fly. There's no bull market anytime soon. It's a bear market. Don't you even think about flying. It's a bear market. Crypto bear market. No flying up. That comes later. I know. So here we are. Still early in the bear market, although the altcoins have taken a big dive. Oh, what's that? Bee buzzing. The altcoins have taken a big dive. Got triggered entry into XLM at 0.21. Raven coin at 0.042. A few others, but there's worse to come. So far, ETH and BTC are holding up. Oh, where you gone? Investing in the Tulip Mania. I've always been skeptical of having any meaningful exposure to the cryptos for the fundamental fact they have no intrinsic value, no earnings, backed by nothing. Where at least the fiat currencies are backed by each nation's taxpayers and military. A store of value, I hear you say. Well, you cannot call something a store of value if it can double or half within a matter of weeks, which is what Bitcoin has done during this year. What's that? Bitcoin supply is limited to 21 million, unlike fiat, which is unlimited supply, with the world's central banks printing presses going 24/7 at full speed. Yes, it is true that fiat currency is continuously being devalued, but along with Bitcoin, there are some 12,000 additional cryptos, so-called altcoins, and smart contracts. Which reminds me a lot of the mortgage-backed securities, giving the illusion of safety from money printing, when in reality they are the exact opposite. Leverage to the hilt, where just like the subprimes, it does not take much to bring the whole house of cards crashing down. Hint: USDT. And this video is an excerpt from my full spectrum extensive analysis of the crypto markets, covering everything from the upside, from Bitcoin halvings, trend trajectory, stock to flow, crypto inflation, and then on the downside, the black swans, of which Tether is foremost, as well as the US trend towards hyperinflation, concluding with a Bitcoin trend forecast into the end of this year. Then we have alternative scenarios and my model portfolio of cryptos to accumulate during this bear market. And all of this extensive analysis was first made available to patrons who support my work, so do consider becoming a patron by supporting my work for just $3 per month. And then there are some really loony crackpot ideas that many have fallen for, hook, line and sinker, such as Chia coin, that is basically soaking up the world supply of hard drives populated with tens of 100 gigabyte files, each all for the chances to win a pair of Chia coins in the 4,608 daily Chia coin lottery. In fact, I consider Chia to be a scam, as I'll elaborate on later in this analysis. Then we have the GPU mania, the world stock of GPUs gobbled up mainly by Ethereum miners investing tens of thousands of dollars in mining rigs, hoping that the ETH price will stay high for long enough to get a return on investment, which has sent the price of GPUs soaring to ridiculous levels, double, even triple MSRP, with even 3-year-old GPUs selling for more than what they cost when new. Then there is the fundamental issue of how to value the likes of Bitcoin. And as far as I can tell, one cannot value it. It is pure speculation. Does not matter if the supply is limited to 21 million. Those 21 million Bitcoins could just as well be valued at $1 than $1 trillion, as many of the crypto maniacs expect to happen pretty soon, until the bubble burst. So the cryptos, regardless of what the crypto enthusiasts that flood the internet with their perma-hodl messages, are very high risk. Even worse, one cannot spread one's risk to a basket of cryptos because they're all basically riding on the coattails of Bitcoin, i.e. whatever Bitcoin price does, up or down, then the others will do by a certain magnitude more. So I consider investing in cryptos as being very high risk, much higher than investing in small cap stocks, such as I featured in my recent analysis on the biotech sector, as at least there was a real chance of making it, then all being directly correlated to the Bitcoin price, which translates into cryptos being assets that one should not be held for a long run, at best for the duration of a bull cycle, as there's always the risk of the Empress no close event happening, i.e. the likes of Bitcoin could literally become worthless overnight, as I elaborate upon it later in this extensive analysis. So cryptos are high risk, however it is offset that high risk, they offer high potential returns, especially during the manias. As long as one does not get sucked into the crypto hype, then one should be able to profit from the crypto booms by buying during the busts. Hence this analysis, as we are at the early stages of the great crypto bear market of 2021, regardless of what the likes of Cathy, crypto maniac, would pronounce as, such as that Bitcoin bottomed at 35k and was off to 500k. So buy low, sell high. It should work with the more liquid of cryptos anyway, just as it does with most markets most of the time. Hence this timely analysis that seeks to present my accumulation strategy for what I'm going to do over the coming weeks and months, as well as the potential risks that could deliver huge flash crashes to the crypto markets. So far I have limited myself to just mining ETH with payouts in BTC with a couple of desktop PCs, though knowing that the Bitcoin price was likely to crash and enter a bear market, I've ensured that the bulk of my crypto generated was spent. So my primary focus is to fund the accounts, the various trading accounts, and set the limit orders for the accumulation phase during the crypto bear market, following which I will rinse and repeat for the distribution phase of the next bull market, as I don't buy into the hype that the cryptos such as Bitcoin and Ethereum will replace fiat currencies, or that Bitcoin is good as gold. Well, gold's done diddly squat in terms of being a safe haven. If you go back and see what the gold books were writing during the past decade, then gold price should be over 10k by now. The same could happen to the cryptos, i.e. they hit a ceiling in terms of speculative interest, given that they neither generate earnings unlike stocks. So I cannot see how the decentralized cryptos are ever going to be as big as the hype implies. Of course, the governments can and probably will adopt blockchain technology in favour of their own centralised cryptos that will be backed by taxpayers and thus supplant much of what today's crypto developers can ever hope to achieve. So I am aiming to invest up to 1% maximum at the right price in a smallish basket of cryptos for a period of 2 to 3 years, and who knows, I may get lucky and double or triple or maybe more my money for maybe a 50% risk of loss of funds invested. And of course, one can fantasize of cryptos 10xing, maybe even 100xing again, just as they've just done in the past. And before I venture down the rabbit hole in attempts to map out a potential multi-year trend forecast for the Bitcoin price, here's a review of my previous Bitcoin trend forecasts and how they panned out. Where my forecast conclusion as of the 17th of September 2019, so it's been quite a while, was for the Bitcoin price to target a volatile trend to new all-time highs. That's 20,000 at the time. Bitcoin was trading at $10,000, and this was after a brief dip towards maybe 9,000, though it could have gone lower to 6,000, and where I also concluded that Bitcoin breaking above 20k during the second half of 2020 could go parabolic, to well beyond 20,000. And remember, this analysis was posted on the 17th of September 2019. And I did make an update on March 20th, during March 20th, 4th of March, where my forecast conclusion was for a downtrend to around 7,500 during early summer 2020, before the Bitcoin price again once more resumed on an upwards trend trajectory targeting 12,000 by late summer 2020. Whilst my most recent quick take earlier this year on the 10th of May was to pencil in a target zone to accumulate Bitcoins in between 19k and 22k. That was after spending several months warning not to hold any crypto as Bitcoin traded along its Q1 highs, i.e. between 55,000 and 65,000. And this is what has transpired to date over the past couple of years. So Bitcoin, after peaking at 14k, traded down to 4k by March 2020 before going higher to 20k and breaking above 20k late 2020 to go parabolic, where Bitcoin peaked earlier this year at 65k and is now entered into a bear market that this analysis seeks to fine-tune the probable destination of in terms of price, time and objective of replicating a similar accuracy as per my preceding Bitcoin analysis. What about any lessons learned? Well, Bitcoin price tends to go a lot higher and lower than anything that can be concluded from technical analysis. Very high volatility. It traded to well below 6k before bottoming, around 4k, and traded to well above 20k before topping, where I personally thought a parabolic move could even hit 50k as a far distant price target. This was when Bitcoin was trading around 10k, and that it eventually exceeded by 15k to 65k early this year. So I will be factoring higher probability moves that are far distant than price targets than technical analysis suggests. That is the volatile nature of Bitcoin, and even more so for the other cryptos. And finally, Cathy Crypto Wood's view on Bitcoin. Virtually every one of Cathy Wood's crypto videos this year has her restating that she expects Bitcoin to hit 500k and a few mention an Ethereum target of $10,500, which has got all of the crypto perma hodlers, enthused. As in a recent video, she iterates Bitcoin 500k and a Bitcoin probably bottoming at 35k. It's gone lower than that. And apparently in the not too distant future, many millions of homes will have Tesla powered walls and solar panels, all for mining cryptos such as Bitcoin and ETH. So that way Cathy kills two birds with one stone, pumps cryptos and Tesla at the same time.
Bitcoin, I mean, you at one point, I think back in April, told Dow Jones that it could go to about $500,000. Do you still hold that target? Do you still think that's where we're headed?
We do. I do. Yassine El-Mandra is our crypto analyst, and we go through soul searching times like this and scrape the models. And yes, our conviction is as high. The one thing that has changed here, however, is the environmental concerns around Bitcoin in particular have caused people like Elon Musk to pull away and say, whoa, let me make sure I understand this. And we believe that even this is going to change because, first of all, right now, the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China, it's over 50% in renewables. And we also believe, and we wrote a paper in conjunction with Square on this, and we're going to have a conference about it in July. We believe that Bitcoin mining integrated into the distributed grid, and by that I mean solar roofs, power walls in homes, utilities, merchant power producers, starting to include Bitcoin mining in the ecosystem. Why would they do that? They would do it because renewables are intermittent power sources, right? Weather, is it sunny or not? Wind, is it windy or not? And Bitcoin mining could take off if there's excess energy from solar being loaded into power walls. It can be offloaded into Bitcoin mining, and the whole ecosystem, therefore, becomes much more economic. If this happens, we believe that the adoption of solar is going to accelerate dramatically because there's another profit center associated with it, Bitcoin mining.
Well, what happens though in the meantime? So here we are at 35,000, Cathy. Do you think we go much lower from here?
You never know how low is low when a market gets very emotional. A lot of traders see Bitcoin dropping below the 200-day moving average. Which was at 40,000. So traders, once that happened, they just dump. Some just dump and run. I think we're in a capitulation phase. Yassine has a dashboard. We were looking at all the indicators this morning. They are all suggesting that we are in the capitulation phase, which is a really great time to buy, no matter what the asset is. A capitulation phase is buy. It's on sale. Now, am I saying 35,000 is the low? If traders, and there are a lot of speculators in Bitcoin, if they are running for the hills just because Bitcoin has broken through a moving average that is important to them, it could continue. But all of our indicators are saying this is capitulation right now.
Do you have a low point on your model for Bitcoin?
No, these metrics are more a measure. Are we in a truly capitulation phase? Okay. And it's very detailed. Yassine uses on-chain analysis.
Bitcoin 500k, if only things could be that simple. The ultimate free, easy money sounds too good to be true. So I am skeptical that it's ever going to happen. Still, it gives a taste of the mindset of the crypto community. A case of hodl for 500k plus. And again, the whole of this truly extensive analysis that took me a good 3 weeks to do has first been made available to patrons who support my work. So for immediate and first access to this and all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And remember to subscribe to this YouTube channel for new videos as we defend ourselves, protect ourselves from the rampant money printing inflation by the central banks. Insane money printing as though it's not going to feed through into wage and price inflation. Big inflation is coming, as I've been flagging for, well, over 6 months. It's more like a year now. That's why I was saying last year, if you're thinking of buying big ticket items, do it now before the price hikes, which have transpired. You know, I bought a Corcher K7 for £340. Current price on Amazon is, was it $565, and similar for lots of other tech items I bought. For instance, the components in my PC that I ordered in January and got delivered in March was £3,100. Current price of the components is over £4,000. Crazy, the inflation is here, and it is accelerating regardless of what the indices say. So protect yourselves by investing in assets that are leveraged to inflation, and AI tech stocks are leveraged to inflation and are about to get discounted. So do subscribe to my YouTube channel for such analysis, and do consider becoming a patron. Crypto Mania, forget Dogecoin. Today I'm going to be mining Budgie coin. What you need is a budgie. Just need one budgie to start crypto mining with Budgie coin. Ooh, that's an angry bird. Eh? You're angry today, Mr. Green. So, this is how you mine Budgie coin. Get rich, get Dogecoin. Right, we need to grab that bougie. Yeah, it's a bougie coin, not Budgie coin. Bougie. Come here, bougie. I need you. Hey! What are you trying to bite me for? We need a bougie. Take my bougie coin. There you go. Got a couple of bougies. Which one's more profitable? Green bougie or the blue bougie? Not sure at the moment. I have to check the exchange rate. Definitely the green bougie is more noisy, more aggressive. It's more aggressive to mine with the green bougie. Okay, so let's start mining with the blue bougie, the bougie coin, the blue bougie coin. Once you get one bougie, the others will come.